All right. Thanks, everyone. Appreciate you checking in. So let's just kind of go over what's happened over the last day or so. I admit I was wrong. I was looking for a 25 basis point cut. The 50 basis point cut came. A lot of times things like this could have a delayed reaction, right? In the short term, this could be one of those situations where what's good for the economy is bad for the market or vice versa, right? So what's bad for the economy could be good for the economy or vice versa, but it kind of plays out after a while. So the Fed, I would say unexpectedly, not a complete surprise, but they cut by 50 basis points. Most people were looking for 25. So what happened? The market took that as a positive and had a big move higher today. And the S&P that we're looking at right now, it looks, at least right now, broke this important resistance around 564, 565, and it gapped up and it's trading around 571. But sometimes these moves are short term, because eventually the market will start to think all right, well, if things are so good in the economy, why the hell are you making a half of point cut, right? So it's a short-term thing. Is it a long-term thing? The market gapped up today. Here's what I want you to focus on over the next, week or two. This is not going to play out tomorrow, but if there is some selling and there is some profit taking, and my guess is that there will be, because in the market, anytime you make a significant move higher, that's what happens. The S&P is going to reverse, right? It's going to go lower. If it keeps going lower and just blasts right through this level, which should be support around 564, there's a good chance it's going to keep going down. If it gets a little bit lower and yet starts to consolidate, and the level that had been resistance turns into support, that sets the stage for a move higher. Markets go down way faster than they go up. And that's because markets go down because people are panicking. They're afraid. Markets go up because people are hopeful, right? And they think the market's going to keep going higher. So hope is not as strong as an emotion as fear is. So over the next couple days, we're going to see there's probably going to be a good retest. The market's probably going to come in. And if the 564, 565 level on SPY becomes a support level, well, then we start positioning ourselves for another leg higher. If it doesn't happen, we'll know. What's today? Thursday? We're going to know by Monday or Tuesday. Then there's a good chance we come just ripping right back here and we go to the downside. And then there's going to be some trading ideas on the short side. So the best traders know that they're not always right. The best traders know that the market is always right. So the best traders listen to the market. They don't have preconceived ideas. And if they do, they dismiss them. I know it's a hard thing to do, because everyone who trades loves to be like, oh, I think the market's going to do this. I think the market's going to do that. But the best traders are agnostic and they have a reactionary position. They play defense, in other words, right? I've been doing this a long time. And, I'm just thinking back here of all the successful traders I've known. They generally are defensive players. They react. No one is bigger than the market, right? No one is stronger than the market. So if you go in there with an idea and you think you're right, yeah, well, you'll get destroyed. If you go in there thinking you don't know what the hell you're doing, but the market does and you react to it, well, that's your key to success. All right, everybody. I hope this helps. And yeah, we'll see you all tomorrow morning. Thanks, everyone.